Hello, and welcome back to the channel. I'm Algabot, and this is where we break down automated trading strategies for MetaTrader 5, one piece of logic at a time. Today we're studying an expert advisor called the Wick Sweep Reversal Hedge. It's a pure price action strategy, with no indicators at all, built around the idea of a liquidity sweep, where price briefly pierces a key level before snapping back. By the end of this video, you'll understand how it maps structure, how it reads rejection candles, and how its built-in hedge order is designed to respond when a reversal turns into a breakout. Let's get into it. So what exactly does this expert advisor do? At its core, the Wick Sweep Reversal Hedge is a price action strategy that trades reversals around recent structure. It does not rely on any technical indicator. There's no moving average, no oscillator, and no momentum line. Every decision comes from reading raw candles and the levels they create. It's designed for the foreign exchange market and works on a single primary time frame, acting once per closed candle so it never reacts to unfinished price noise. The engine begins by mapping nearby structure. Over a look-back window of 12 candles, it records the highest high and the lowest low. These two levels act as shelves, areas of support and resistance where resting orders tend to gather. The strategy then waits patiently for a single candle to sweep one of those shelves. A sweep means the candle's wick pokes beyond the level, but its body closes back inside, suggesting the move beyond the level was rejected rather than sustained. To avoid acting on every minor poke, the strategy adds two filters. First, the rejection wick must be dominant, at least as large as the candle body, controlled by the WickRatio parameter. Second, the candle must show conviction. Its body must exceed the recent average body by the body factor, signaling a decisive reclaim rather than a slow drift. This approach is best suited to traders who are curious about liquidity-based, structure-driven systems, and who want to study how a rules-based fade can be combined with a protective breakout hedge. As always, this is educational information only and not financial advice. Trading carries real risk, and losses are a normal part of any strategy. So everything here is meant to help you understand the mechanics rather than to recommend any action. Let's walk through the exact logic step by step. On every new closed candle, the strategy first checks whether it's flat, that is, no open position and no resting order of its own. It only looks for a new setup when nothing is active, which keeps it disciplined and one trade at a time. It then defines the signal candle as the most recently closed bar. It measures that candle's body, its total range, its upper wick, and its lower wick. Separately, it scans the look-back window before the signal to find the swing high, the swing low, and the average candle body over that period. For a long setup, the strategy detects three things together. First, a sweep below support. The signal candle's low dips beneath the swing low, but its close finishes back above that level. Second, a dominant lower wick that is at least the wick ratio times the body, with a bullish close above the open. Third, conviction. The body must exceed the body factor times the average body. When all three line up, the strategy signals a long entry at the current ask price. The stop loss is placed just beyond the swept extreme, a small buffer below the signal candle's low. That buffer is a fraction of the candle's range, set by the hedge buffer percent. The distance from entry to stop becomes the risk, and the take profit is set at the reward multiple times that risk, defaulting to 1.8. The short setup mirrors this exactly. The signal candle's high pokes above the swing high, but closes back below it, with a dominant upper wick and a bearish close, plus the same conviction filter. The entry is at the current bid, the stop sits just above the swept high, and the target is again the reward multiple times the risk. Now the hedge. Each time it enters, the strategy also parks a stop order just beyond the swept extreme, at the same level as the protective stop. The thinking is simple. If the so-called reversal was actually a genuine breakout, the fade gets stopped out and the hedge activates, following the continuation the other way to help recover the loss. If price simply reverses cleanly, that hedge is never needed. So once it has aged past the hedge expiry window of 6 bars, the strategy cancels the stale order and resets. Let's look at the actual MetaQuotes code as it appears in MetaEditor. At the top are the input parameters you can adjust. Lookback sets the structure window at 12 candles. WickRatio, defaulting to 1. controls how dominant the rejection wick must be relative to the body. Body factor, at 1.1, demands a decisive candle versus the recent average. Reward multiple, 1.8, scales the take profit against the risk. Hedge buffer percent and hedge expiry bars govern the protective stop order, and lots sets the volume. Just below, the code computes two things used by both sides. Conviction, which checks that the body exceeds the body factor times the average body, and the buffer past the swept extreme. Now the bullish block. The Boolean swept low is true when the signal low is below the swing low, but the close is back above it. The Boolean bull pin requires the lower wick to be at least the wick ratio times the body reference, with a close above the open. When swept low, bull pin, and conviction are all true, the code sets the stop just below the swept low, sets the take profit at the reward multiple times the risk, and calls trade.buy with that stop and target. The bearish block is the mirror image. Swept high is true when the signal high is above the swing high, but the close is back below it. Bear pin requires a dominant upper wick with a close below the open. When all three conditions hold, the stop is placed just above the swept high. The take profit is the reward multiple times the risk below entry, and the code calls trade.sell. Both sides share the same structure-based logic in opposite directions. Let's bring this to life on the chart. On screen is an illustrative example for the euro against the US dollar. Notice there's no indicator panel beneath the price. This strategy reads pure candles and structure, so the only reference lines you see are the support shelf at 1.0845 and, later, the resistance shelf at 1.0900. We begin on the left. The first few candles drift sideways, repeatedly testing the lower region of the range. As they do, they carve out that support shelf at 1.0845, the swing low that the strategy records over its lookback window. This is exactly the kind of level where resting orders tend to cluster, and it's the shelf the strategy will watch for a sweep. Now watch the fourth candle. Its lower wick pierces straight through the support shelf, dropping to a fresh low beneath 1.0845, but the body closes firmly back above the level. That's the liquidity sweep. The long lower wick shows that sellers pushed price below support and were immediately rejected. The strategy checks its filters. The lower wick is at least as large as the body, satisfying the wick ratio, and the body is decisive enough to clear the conviction test against the recent average. With the sweep, the dominant wick, and the conviction all aligning, the buy entry marker appears at the close of that candle. At the same moment, the protective stop is placed just below the swept low, and the breakout hedge, a sell stop order, is parked at that same level, ready in case price breaks down instead. The take profit sits above, at a distance of 1.8 times the risk. From there, follow the next three candles. Price lifts off the support shelf, each candle printing higher highs and higher lows as the reclaim plays out. By the seventh candle, price reaches the take profit target, and the long trade closes for a gain in this illustration. Because the reversal resolved cleanly without a breakdown, that resting hedge order is never needed, and after the expiry window, it would simply be canceled. Now the chart shifts character. The next several candles push up and stall, building a new ceiling, the resistance shelf at 1.0900. This becomes the swing high the strategy now monitors, the upper shelf where the next sweep may occur. Watch the candle that tests it. Its upper wick spikes above 1.0900, printing a new high beyond the shelf, but the body closes back below the level. That's the bearish mirror of what we saw earlier, a sweep above resistance, rejected. The upper wick is dominant relative to the body, satisfying the wick ratio. The close is below the open, and the body passes the conviction test. With all conditions met, the sell entry marker appears at the close of that candle. Here the stop sits just above the swept high. The buy stop hedge is parked at that same level in case price genuinely breaks out upward, and the take profit is set 1.8 times the risk below the entry. Follow the final two candles down. Price rolls over from the resistance shelf and slides lower, reaching the take profit target on the last candle, closing the short for a gain in this educational example. So in one clean sequence you've seen both halves of the strategy, a long from a sweep below support, and a short from a sweep above resistance, each confirmed by a dominant rejection wick and a conviction body, and each protected by a structure stop and a standby breakout hedge. Remember, this is a tidy illustration. Real markets are messy, and not every sweep reverses. And that brings us to the end of our breakdown of the Wick Sweep Reversal Hedge. Today we covered how it maps swing structure into support and resistance shelves, how it identifies a liquidity sweep with a dominant rejection wick and a conviction body, how it places its structure-based stop and its reward-based target, and how its standby breakout hedge is designed to respond when a fade turns into a genuine breakout. If you found this useful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe so you don't miss future breakdowns. You can find more strategy analyses at www.algobot.live. Remember, everything here is educational information only and not financial advice. Past performance does not guarantee future results. Trade responsibly.